Hello, today we'll be taking a closer look at the commodities market, specifically oil, since it experienced a downward pressure this summer. We have Louis and Nikita, the co-heads of the commodity team at the Warwick Investment Fund, and they'll be giving us a deeper insight into the oil market. Now, the Ukraine-Russia crisis, ISIS in Iraq, and the destabilized state of the Middle East through Syria, that would usually not imply a lower oil price, would it?
Absolutely, you're right. However, the direct impact on actual oil output is not as much as expected by the market. So meanwhile, we have other bigger tangible factors that directly impact supply and demand of oil, hence further putting downwards pressure on the price. First of all, I think we should look at the demand side. So right now, the economic climate globally is not accommodating higher oil prices. For instance, the IMF recently, I think, reduced the global growth forecast from 3.7% to 3.3%, which is quite substantial. And meanwhile, the OECD also reduced its growth forecasts in the Eurozone due to really disappointing second quarter GDP figures. So based on all that, the International Energy Agency reduced its expectation for the expansion of oil demand in the near future.
Louis, what about the supply side?
On the supply side, I think the most important developments are on the other side of the Atlantic. So if you look at the US, for example, they are feeding increasingly their demand with domestic oil, which is driven by the recent shale oil boom. So I think this has two important consequences. First of all, with more oil coming out of the ground in the US, this goes into the WTI benchmark, and with higher supply comes a downward pressure on prices. Secondly, because they're feeding their own domestic demand, they don't need import anymore that much, right? So this cuts off some of the import flows from OPEC and Nigeria that have to find a home somewhere else. So they're diverted to other parts of the world, like Europe or Asia, where they're meeting weaker demand, like Nikita said. Because that additional supply is not absorbed, there is also downward pressure on the Brent benchmark.
That's true. I recently read that Libya has reopened its terminals. What are your views on that?
Exactly, yes. So this adds on to the oversupply in the market. However, Libya is only a part of OPEC, and OPEC is, I think, currently the major player in the oil markets. Historically, OPEC has been a stabilizer in the oversupplied oil markets by cutting supply, basically, especially Saudi Arabia, which accounts for 1/3 of the total OPEC production. So, however, recently we are witnessing a new trend. So we have new and more price-sensitive producers such as deepwater and shale who have higher production costs, and hence the kingdom feels less of a need to intervene here. Also, furthermore, Saudi Arabia specifically only needs prices of around $91 per barrel to balance its books. And in addition, they have a huge cash pile of $750 billion. So considering this, they can withstand even lower prices.
Yes, exactly. So some sources even argue that Saudi Arabia will try to, or is trying to leverage this short-term economic stability against rival oil producers. So not only shale oil and deepwater, but also rival nations like Russia, Iran, and Iraq. Because those nations are much weaker, because they haven't been able to save in the past, they don't have the same cash reserves, and they have higher break-even points. So for example, Iran, they have a break-even point of $140, so they need $140 per barrel to balance its books, yes. Saudi Arabia will try to gain market share by basically letting prices tumble and exposing those rival nations to more pressure, basically. I think despite what Nikita said, which basically is a very pessimistic view on OPEC reacting on this oversupply, I think investors should still be looking forward to the next OPEC meeting, which is in late November and will clarify the situation.
Those are some very interesting points. Thank you for your valuable insight. It was a pleasure having you. Thank you for your time.
Thank you.